If you are a normal person like me, at the end of the day, you don't care about how perfect you got to be. You just want to make consistent money from the market. Like, can we just be real for a second? Like, that's all we really care about. We don't care about how perfect the move may be. We don't care about how great we have to be. We just want to be consistent. So today I'm going to show you how I made over $1,600 today using statistics, and how once you look at the market from an objective view, it tends to get much easier to consistently execute the same way. Because just like if I were to ask you that when you have two doors in front of you, you have door A that gives you an objective 50-50 odd, then you have door B. Door B gives you a 50.1% chance at becoming a millionaire. Every single person would choose door B. Why? It's an objective number. It is a number that is telling you that you have an objective odd, you have a probability that is a little bit higher than a 50-50 random chance to becoming a millionaire. And so if you have that same odd every single day going into the market, that if you look back at what are the two main things that most traders have as a problem that gives them inconsistent execution, that's what? They hesitate when the trade sets up, or they freak out because they're scared of it losing, or they're getting way too antsy and they take the entry too early, right? All these messy habits, it all comes from execution. And then when they are finally executed, when they're finally in the trade, they overmanage the trade. That's the two biggest things. If you look back on all the bad habits that most traders have, it is inconsistently executing, and then when they finally execute, the improper management of the position. They either overly manage it because they're scared of losing the profit that they see that's unrealized, or they close it too early when it's in drawdown because they're scared of a red number. You know, the scenarios are endless. So today I'm going to show you how this trade that, you know, while as flashy and as sexy as it was, is a trade that I am able to capture a good amount of a portion of the week by just simply respecting what statistically the market does. And so I'm going to explain that today, but then I'm also going to get a little bit more less granular and more just real. That if you have an objective odd of something happening above a 50-50 chance, everybody's going to go to that odd. If you have the decision between a random opportunity and something that gives you anything above a 50-50 chance, you are going to gravitate to that. So if anybody goes to my Twitter page and watches phase 1 or part 1 of this video, that I'll label my philosophy on trading. So go to my Twitter, it's AC_trades, and it's in my highlights section. And my whole philosophy, and to just summarize this, is I trade statistics. So something that gives an objective reason of being hit. You guys see over here on my midnight snap indicator, the link is in the description below to even use this. It's a free indicator, and you can put any opening price between any session and see the statistic of in the past look back period. So if I go to the 5-minute, in the past 77 days, we've retraced midnight open between the hours of 8 to noon 62.3% of the time. Now, that 62.3 gives me a lot better of an odd, or a probability of being correct about a specific direction, more than it doesn't. If I just went in every single day and flipped a coin, I would have around a 50-50 odd. If I start at 8 a.m. and we're below midnight open, I already have some sort of objective probability in my favor more than I don't. But then this is where people, when they hear the term statistics, this is where they kind of start getting a little bit muddy, and that's they look at this 62.3 but forget the other side of the coin. They forget the other side of the 30 to 40% probability of them failing, aka understanding what live price is telling us. And when you can align statistics, which is just directions, let's just be real. It could be this line could represent midnight open. This line could represent a previous day high, previous day low, previous day mid. Anything that is a constant that you can put a number to and quantify that between this time period, it has an X probability. And so if I know that, again, going between the hours of 8 to noon, that midnight open has a 65 to 68% probability. If I have that, and then I have a live price component, and this is another thing, right? People think that they have their own definition of live price, when really it's, you know, that there is no one definition. There is no perfect definition of what price action is, because think about it. What is in the name? Price action. Price has to do an action to give you some sort of clue. So it could be taking highs and lows. It could be a candle pattern. It could be how a candle opens and closes. It could be how a candle prints. It could be how a candle interacts with a range or another candle. It just has to be an objective action that you can repeat. That's why anything in this world is in some way, shape, or form can be used for trading. People joke about moon cycles, but think about it. What are you actually doing with moon cycles? You are anchoring yourself to a moment of time that is repeated, that then you build a statistics around. Now, obviously, it's kind of goofy to do that, but hey, at the end of the day, what are we all doing as a trader is we're trying to find consistent time periods or consistent ways of executing. We are trying to find a strategy because that's what a strategy is. It is a way of consistently executing in a world of randomness, in a world where you don't know the actual outcome, but you can trade the probability. And if you know, and this is where I love statistics, if you know that in the world of statistics, that a probability is above 50-50, so every single day, if my targets, and the reason why I trade the way that I trade is toward a level that has something above a 50-50 odd, and then I respect live price, which in my opinion, and what I use is 930, the P12 high and low, and we'll get into that here in a little bit. But I use these live price components to tell me that if we are above this area that is telling me objectively bullish, then when are we going, where are we going to go to? Are we just going to go to the moon? If we break above this area, are we just going to go to Mars? And am I going to shoot for a 700 bajillion point trade? Or where is that realistic expectation that, okay, cool story, I'm bullish, but where am I bullish to? This is where statistics come in. Statistics don't tell us what's going to happen. Statistics are not predictability tools. They're just telling us that if live price is agreeing in the direction that your live price component is telling you, well, then this is a realistic checkpoint by this certain time. So if I know that midnight open between the hours of 8 and noon, let's just make these two lines here noon. If I know that midnight open is between this time anchor, a very high probable of getting hit, but then at RTH, the regular trading hours open, when 9:30 hits and we open up and we break below it, well, guess what? Cool story, bro, about your spreadsheet, but maybe this is the time period that we do not retrace to midnight open. Why? Because it's the RTH open. It is the regular trading hours open. I don't care how you trade. When we finally get a close below this open, we are accepting in the real market a lower price. It's like the opening of the RTHs. Think about it like an auction. The auction is starting out. Can I get 10? Can I get 20? Can I get 30? And think about it, if people keep bidding in the auction, what's happening? That price is going to keep on climbing. If nobody's doing a bid, if nobody's bidding on that price, in the world of an auction, it would just stay at that price. In the world of the market, we go down because nobody's accepting that bid. People are not accepting where we started off the day. So if 930 is accepting below, even though this statistic is above, maybe 930 is giving me the hint, and this is why I love 930 so much. Maybe 930 is giving me the hint of the other side of the coin. But then this also makes it easy for when we do finally accept above 930. I now have a realistic target, and I know where I can place my partials to scale out of my trade to pay myself. I know how I can build a position. And if I know that midnight open is a part of a mean reverting day, because we mean revert within the market more than we trend, and all that means is we do this more than we just do this, well, then now what this paints a beautiful picture for is if I know that behind this goofy little yellow line here is a 65 to 68% probability, but then I know when live price is in agreement or disagreement with this probability, I know when we're going to mean revert most of the time. Okay, I don't know. I just have a good probability that most of the time we may experience the mean reversion of the day. Versus if we trade away from it and we accept below the RTH open, well, then maybe this is the day we trend. Maybe this is the day we make some sort of aggressive move. So then combining that with how did I take this trade today? Well, how is this trade so how did I see it? Because a lot of people on social media, they'll be like, oh, this was so obvious, but they'll never actually explain in detail why the trade was obvious. Well, this is why for me. So going into today, the first thing I do going into any trade idea is I remember at the end of the day, I am a day trader. So what does that mean? That means as a day trader, I am trying to trade the fluctuation of this daily candle. I am trying to, when this daily candle is printing, trying to decide, does it want to be bullish? Does it want to be bearish? When it's doing this little bounce and dance here, I am trying to effectively and profitably every single day, or consistently, not every day, because I'm going to have red days. I'm going to try to trade when this candle does this little wiggle here. I'm trying to be a day trader in the wiggle of this daily candle. And so for today, where does that get me to rule number one? Rule number one is I want to see, is the high and low that we made in the overnight session an in-stat high or low? Well, I can see that today we had an in-stat high of day. Okay, statistically, we're going to make a high or a low within the daily candle in 4 major time periods, anywhere between 18 to 1900, anywhere between 3 a.m. and 4 a.m., 9:30 to 10:30, or market or power hours, so 15 to 1600. These 4 major time periods. So what I get to do going in around 7:50 to 8 o'clock is I get to see where is the current high and low of day, and does any of these high and low of days actually make sense with just staying and remaining? And what are we doing in the live price component to agree or disagree? So today we have an in-stat high of day. We can statistically say that historically we lock in a high of day at 1800, but then this low of day we made it 2025. This is an out of stat low of day. Out of stat low of day. And in this out of stat low of day, what does this play? Why does it make sense for me to label this as an out of stat low of day and be focused on the statistical high and low of day? Well, if live price is disagreeing, aka it's disrespecting, it's not supporting the P12 mid, okay, and what is the P12 mid? The P12 mid, high and low is the first 12 hours of the daily candle. So I'm cutting the daily candle in half, and I'm seeing how are we interacting with the first half that maybe could give us clues on how the second half is going to form, how it's going to print. So if we're losing the first half of the daily candles mid, which is the P12 mid right here, well, then most likely just think about it logically. Think of like the path of destruction. If the path of destruction is to the downside, well, what's in that path? If the path of destruction is to the upside, what's in that path? Today, the path of destruction was we were breaking through the P12 mid and now rejecting it. So if we get a closure and an acceptance below the RTH, that is everything I need for live price to tell me we're bearish. And now I use statistics to tell me how far away are we bearish to. So this lets me know when I'm looking at these highs and lows of days, if this is an in-stat high of day and this is an out-of-stat low of day, well, if we're interacting bearish in the pre-market here at 830, 840, then we're most likely coming for this low. And so then I can say, well, if we're most likely coming for this low, when is the next low of day time period? When should I be expecting? Boom, market open. So then I go into market open. I'm saying, okay, at market open, if now that the high of day is statistically in or potentially in, what does live price have to do to finally get me into this short? Well, first and foremost, I want to see 930 give me a decent range to define my risk. If 930 gives me a super high range of, 3%, 0.4%, I can't define my risk. So it's no trade. But if we get a break above or below this range and it's now in agreement with what we did in the pre-market, it's in agreement with the statistical high and low of day, that's the final thing I need is just a good close. And then what I do is I take statistics and I say, hey, what is the highest strike rate move of whatever trade that I'm doing? And then how can I pay myself in the highest consistent portions of the move and then let the runner do the damage for when we make these crazy extensions off of 930 or, a trending day. And that's where you see all of these partials coming in, right? I pay myself at the 70 to 80% highest strike rate move, then just a little bit more to make sure the trade is cash flow positive, then more for the extended move of the trade if I am very, very correct. And then the final thing is we do a phenomenon that we like to use and we study way more extensively in the boot camp. So if you want to join it, link is in the description below. Join the Discord and all that good stuff. And we trade this live every day, Monday through Friday. So this trade was taken live. And what we do is we like to study one thing called the 3-hour line. And the 3-hour line just simply states that it's either going to be a 3-hour line or an apex. So statistically, when we break away from this 930, we're either going to do, more often than not, a clean move or a distribution for the next 3 hours or some sort of fake move. And then we make what we like to call an apex, or, it looks like an A or an upside down A. And this is the days where we maybe lock in a higher low of day at 930, or maybe we fake break in one side and then we range and chop around 930. You can go and look at different examples of that. But either way, I use the 3-hour line to scale out my trade to see when is it statistically significant that I'm on the wrong side of live price. So if we're going to the downside and we're taking the 10 o'clock is taking the 9 a.m. low, well then what I'm thinking is first and foremost, are we in a 3-hour line? And if so, what is the final sequence that has to happen? Well, if I know in a 3-hour line that if the 10 o'clock takes the 9 a.m. low, well, then the sequence of this move is that 11 would have to take 10 o'clock's low. Just common sense. You don't have to know anything crazy. If I were to tell you in the next 3 hours we're going to go down, you would logically expect the 11 o'clock portion of that move to take the 10 o'clock portion low. So then what do? I let live price tell me if I'm right or wrong to let the runner hold or exit. So when we got to the downside here was the 10 a.m. low. We never took the 10 a.m. low. Look at that. We never took it. And so once we started breaking above the first quarter of the 11 o'clock hour period, if you want to learn more about that, again, join the bootcamp. We teach you everything I'm going over. Link is in the description below. Once we broke above the first quarter of the 11 o'clock hour, closed my runner, and that was the end of the day. So that was the trade and the general overview, and that's how statistics gave me the confidence to hold this trade. A lot of you all that have problems either executing or holding trades, you have it because of the fear of the unknown. Statistics allow the fear to be battled. That demon of uncertainty, you don't ever get uncertainty in the market, but what you can do is you can study what statistically happens more than it doesn't, and now you have edge of something to see, like how effective is it operating. Just like if you were to invest in a real estate property, and I were to say, give me $50,000 to go 50-50 on this property, you would say, show me the numbers. And in those numbers, you would then find confidence that there's a high probability of turning a profit because you did your research, or you would find a low probability of turning a profit and you wouldn't take the trade. You wouldn't invest in the real estate property. Statistics is the same way. Instead of just relying on discretion or memory or feelings, I love to use objective numbers that happen more than they don't to be the reason why I target positions the way that I do. I use boxes, essentially. I use boxes to tell me if I'm right or wrong. I have let go of the fact that I am not a great trader. I am not the best trader out there. I'm not a perfect trader by any means, but I am consistent and I love what I do. And I can do what I do every single day. I'm not going to do it profitably every single day, but I will execute risk consistently the same way that now, because I'm executing consistently through the objective lens of data and statistics, I now can see what is going right, and then I know how to pivot because those numbers are objective. I know when things are going wrong because those numbers are, again, objective. I know that if I'm shooting for cash flow targets that are around an 80 to 70% strike rate accuracy, not strike rate of a trade, but just accuracy of being hit, but then over the course of the next quarter, my cash flow trades are going down, I know to look at that as a business instead of just a singular day-by-day portfolio or a P&L, and I can say, oh, wow, in the cash flow department of my trades, aka the partials of my trades, I need to start trimming more. I need to start trimming a little bit closer because the statistic is telling me that I'm starting to fall down, and vice versa. If I'm shooting way higher than I need to, I know to start shooting for more profit. These statistics, all they do is they don't act as predictive measures of performance. They just let us know, like a temperature gauge within a business of any degree, what's doing really good, what's doing really wrong, and how to have objective expectations of live price. When live price is accepting to the downside, how far, what checkpoint could price do? Is it an 70% probability because in the past 100 samples, we take the previous day low when 930 breaks below X amount of times? And if so, cool, there's a number beside of it. Now I know that if previous day low hasn't been hit 2 days in a row and it averages a 60 to 70% hit rate of just being hit once a day, well, guess what? Now this may be the day, this may be the time that previous day low gets hit. You know, you can have objective numbers give you confidence to hold on to a trade, to let a trade happen, to let it breathe. So that way you know that, hey, objectively, I know that when we break above 930 or below 930, without any other analysis, 0.1 to 0.3% is my golden pocket. This is my sweet spot, this box right here. And so then, if I can just do my analysis and spot the days where we do chop around 930 and we do just go crazy, how can I reduce this? I just give myself a limit. Listen, if I can't get 10 to 15 points out of this move 3 times, I'm done. I don't need to do anything else. It's a day, just like how a business pays for, expenses, just like a real estate property. You got to get a new roof every now and then, or a HVAC system. Things happen, things break. So does in business of trading. That's what losses are for. That's their expenses. You're paying for the future ability of more exponential returns. So it's going to happen. It's going to happen. You will lose. Every strategy takes losses in drawdown. But when I can statistically say that in the course of a 5-day trading week, only 1 or 2 are going to fail at just the cash flow portion of a move, well, now guess what? I have a business number that I can track, I can measure, and I can quantify to say, now my max risk of ruin can be taken care of by knowing what my left and right limits are of a typical losing day or a typical losing week or a typical ineffective target. But then I also know the other side of the coin. I know when I am correct, the maximum MFE or the maximum high or low of day or the maximum time that we push away from a certain area, I can use these numbers to also tell me how to maximize my winners. So just like today, I was able to maximize and get a few more positions out of this trade instead of just a one and done TP here, because I was able to see that statistically, we're going to make either a 3-hour line or apex. And so statistically, because the tools that I was able to use, we have this really cool indicator called the daily profiler that you learn in the boot camp. All the tools that I have, while it may look kind of funny with all these lines and boxes on my chart, they were able to give me objective reasons to hold and to keep holding. And I would never be able to do this if I was just discretionarily trading, because I wouldn't have the numbers to fall back on to know if I'm right or wrong. I would just be falling on pure human discretion and, feelings. And how terrible does it feel to have a really good home run day but not know if you can replicate that tomorrow? How crazy and scary does it feel to have, kind of a really good trading day, but you're like, dude, I'm glad today was good, but I don't know if I can repeat that tomorrow. Using statistics, you can. You can see, oh, wow, yeah, this was a home run day, but I know to expect this X amount of times per month. Now, can I fall short of that? Absolutely. Can I fall above that? Absolutely. But it gives me a temperature gauge of where is my mean and mode and median at, right? Where do I typically fall within average, within median, within mode? And that way, if I'm falling below, is it anything I have to do, or is this just typical, mean reversion of my strategy? But then if I'm falling above, dude, what is going right? Is there anything going right? And what does right really look like? And then so that way I can maximize the days that go right very well and quantify that. And then I can reduce the days that I'm very wrong by just saying, man, if I don't get 3 to 4 attempts out of this move that happens 70 to 80% of the time, well, I'm just losing against the winning team. I'm like that team that loses to the team that goes on to win the championship. I'm happy to lose against them. If the team that I lost in the goes on to win the championship and gets the gold, then I'm happy to lose. Like I'm happy to lose against the champions. So the same thing here. Like I want to lose against what statistically is the less probable scenario. And then I'm just going to make sure that any time that I am losing and I'm not seeing the market clearly, because I will, there are plenty of days, just like, guys, I'm making this recording on a beautiful trade. There's days where I take 0 for 2, 0 for 3, and I'm done. I look like an absolute idiot. Like I can't capture 10 points to save my life. It happens to all of us. And if nobody tells you they don't, they're lying to you. But it's all about managing that risk. We always say that all the time. Day trading is about managing risk. It's about managing the downside. So the downside here is just, what is the worst possible scenario? How can I make it hardly ever happen or be very rare? And then how can I maximize the times that I'm very right? And this is just a great example of that. And I wanted to get this on a recording video, and I wanted to show you all why I'm so passionate about using statistics, why I'm so passionate about the way that I trade, because it gave me, a normal person, a normal dude that literally, I don't come from a financial background. I don't come from, Wall Street or anything like that. I'm not some dude that grew up with a silver spoon. I'm a normal guy that respects objective numbers, but that's what any business owner does. That's what any successful real estate investor does. They respect the numbers of where their money's going. That's what a stock investor does. That's what anybody growing a business would do, is they would run the numbers, see what's attributing to growth, maximize on that, what's attributing to expenses, minimize as much as you can with that, and build systems to make sure to know when that's going to happen again, and then just let it run. Every quarter, make small little micro refinements here and there. That's how a business operates. I hope you all have a great rest of your day. I hope this video was helpful in some way of sparking some sort of light bulb moment in maybe how I like to manage risk around statistics, or maybe this inspires you to go and find your own statistics. Don't trade the way that I trade. You don't have to trade 930 breakouts. It can be anything. The fundamentals I want you to take away from this video is not copy the way Austin trades. It's, what are the things that make Austin consistent? And then how can I add that in my own perspective? Maybe you're not a breakout trader. Maybe you're an ICT trader that likes pullbacks with tight stops. Maybe you're a volume-based trader that, trades around a volume profile. Maybe you're a support and resistance trader that trades around support and resistance, and you would like a little bit of statistics on when is the best time to buy a pullback when we are below midnight open, right? Like, when can I use statistics and some sort of objectivity of the market in my favor? That is what I hope you get out of today's video, and I hope you all have a wonderful rest of your day. Stay grinding on your goals, and as always, never let anyone tell you that you can't do something they've never done themselves. I'll see you guys later. Bye-bye.